Reverend Mr. Mahinda Sirivardana, members of the Governing Board, the Monetary Policy Board, Board-appointed committees, and the Stakeholder Engagement Committee of the Central Bank of Sri Lanka, Senior Deputy Governor, Assistant Governors, and senior officials of the Central Bank of Sri Lanka, distinguished invitees, ladies and gentlemen. A very good morning to all of you, and my warmest wishes for happiness and prosperity in the new year 2025. I'm honored to welcome you to this important flagship event, the annual event hosted by the Central Bank of Sri Lanka at the beginning of each year, unveiling the Central Bank's policy agenda for 2025 and beyond, which outlines the policies aimed at reinforcing price stability and ensuring financial system stability in the period ahead. My name is Navin Pereira, and I'm delighted to take you through today's proceedings. As you are all aware, Sri Lanka faced unprecedented economic challenges in recent years, underscoring the need for bold and decisive action. The focus in 2022 and 2023 was on implementing corrective measures to steer the economy out of the crisis, while last year's focus was centered on restoring stability. This year in particular, the central bank's focus shifts towards facilitating growth necessary to drive our nation towards a brighter, more prosperous future while preserving the hard-won stability. The central bank's policy agenda for 2025 and beyond, which we are about to unveil, is the result of careful deliberation and, of course, collaboration with key economic stakeholders, reflecting our collective commitment to guiding Sri Lanka towards a path of sustainable and inclusive growth. These policies are the result of rigorous strategic planning, in-depth deliberations at the central bank's decision-making boards, the Governing Board and the Monetary Policy Board, and valuable insights from external stakeholders, many of whom who are present here today. So before we dive into the main event of the day, I would like to inform you that today's event is being live-streamed across all social media channels of the central bank. And we also encourage you to share the details with your colleagues so that they too can listen to the governor's statement live. Also, most importantly, to ensure a smooth and uninterrupted experience for everyone, we kindly request you to keep your mobile phones on silent mode during the proceedings. So without further ado, it gives me great pleasure and it is my privilege to invite the Sri Lankan of the year 2024, none other than the Governor of the Central Bank of Sri Lanka, Dr. Nandalal Veerasinghe, to present the Central Bank's policy agenda for 2025 and beyond. Over to you, sir.
Thank you, Navin. Good morning, Reverend Professor, Secretary of Treasury, my friend Mahinda, Advisor to the Honorable President, members of the Governing Board and the Monetary Policy Board, and also members of the Board-appointed committees, Stakeholder Engagement Committee, members of SEC, Senior Deputy Governor, and colleagues, and the invitees. And also we have invited representatives from international organizations, media as well. So ladies and gentlemen, thank you very much for being here to listen to our policy agenda for 2025 and beyond. They already, at the introduction, Navin explained the process that we have been taking in the past, and also we continue to communicate our policies in a much more transparent manner even going forward. So first of all, let me wish all of you a very happy and prosperous New Year, and warmly welcome you to this occasion of unveiling our policy agenda. It's now customary for the Governor to articulate at the beginning of each year, which I have been doing for several years, the broad policy agenda the Central Bank is proposing for the current year and the period ahead. Obviously, it's a dynamic plan, so we are always willing to revise based on the circumstances. This is a key aspect of the bank's communication strategy, also aimed at enhancing bank's transparency and accountability to all stakeholders. So Sri Lanka, as you all know, has made a significant recovery after enduring its worst economic crisis in history. So first part, I'll briefly talk about what happened last year, but we focus more on the future. So the macroeconomic stability that was restored through decisive policy actions and collective resolve has laid the foundation for a stronger, more resilient economy. Leveraging on the stability achieved, the country is making notable progress by continuing with the economic reform agenda, strengthening its economic buffers, institutions, and governance, and building overall resilience for potential headwinds that we might face at any time in the future. We never know. So significant progress was made on the fronts, importantly for the government, the front of debt restructuring, as well as the extended fund facility arrangement with the IMF. Faster than expected recovery in domestic economic activity was supported by renewed business and consumer confidence, as we have seen already. General price levels have adjusted down following a period of high inflation, adjusted down marginally with the deflation situation, enabling the continuation of easy monetary policy stance. That's our main key responsibility. External buffers have been built to a certain extent, supported by improved foreign exchange inflows, amidst the flexible exchange rate regime. That's our monetary policy framework. A notable improvement in the fiscal sector performance also is supporting fiscal policy, was also witnessed along with the efforts to enhance support extended to poor and the vulnerable, those who are the most affected due to the crisis. Financial system stability was reinforced through the strengthening of the regulatory framework and improved risk management and monitoring. You all can remember the status and vulnerabilities of financial system had. Now we are in a much better position today. These achievements are outcomes of the continued commitment and perseverance and the sacrifices made by all stakeholders of the economy. Obviously, we know there are a lot of we will have to share the pain during the crisis, including the general public, in pursuing the economic reform agenda. More importantly, these measures have helped restore investor confidence and set the platform for longer-term transformation of the economy. While broad-based stability has been achieved, the focus going forward would be on fostering sustained growth, which requires driving innovation, enhancing productivity, maintaining a strong commitment to implementing structural reforms, and encouraging greater stakeholder collaboration without compromising hard-earned stability. These all are the responsibilities of all of us, including the central bank, government, and all the stakeholders. The central bank, that's our mandate, in keeping with our mandate as stipulated in the Central Bank of Sri Lanka Act, will commit to maintaining domestic price stability, the first important first objective, and the securing financial system stability, thereby playing a leading role in creating an enabling environment for all stakeholders of the economy to thrive. So this year marks an important year for the central bank. It's going to be 75th anniversary. The focus and efforts will be increasingly directed towards in this year theme, in the 75th year, is to maintain stability for prosperity. That is the theme that we are going to talk about. So with this initial preamble, now just to briefly talk about the finance sector and Sri Lankan economic performance during 2024. We know Sri Lankan economy achieved significant strides in restoring macro stability and maintaining the stability of the financial system, including monetary stability. The EFF program continued supporting the stabilization of economic conditions while making major milestone in the country's journey of economic recovery. The government completed its debt restructuring process successfully, except for a small portion by end of 2024, hoping that also will be completed soon. That has paved way for the normalization of relations with creditors and external partners. Following this development, other important one, the sovereign rating of the country was upgraded by 2 leading rating agencies, thereby notably reducing the country's risk premium that we had last couple of years. Inflation, that's our key responsibility, declined steadily throughout 2024 and eventually reached deflationary levels towards the latter part of the year, last year. There was a temporary acceleration in headline inflation, as you can remember, in early 2024 due to the increase in value-added tax and removal of the VAT exemptions for several items in the consumer basket. However, inflation decelerated thereafter, reaching levels below the target of our commitment to bring it to 5%. This driven by higher than projected downward revisions. Firstly to the energy prices and then stronger currency as well as the decline in food prices, both due to global and domestic price trend. Consequently, in September 2024, headline inflation reached deflationary levels for the first time in 9 years. Meanwhile, co-inflation, which is what we call underlying inflation trend, which mainly reflects the demand pressures in the economy, also reached the lower positive level, still below the what I think appropriate 5%. With the notable deceleration of headline inflation and subsequent deflation that we have seen recently, inflation target, our mandate, the commitment, was breached from the lower margin for 2 consecutive quarters in the second and third quarters of 2024. So such inflation target miss continued in the final quarter of 2024 as well. Accordingly, as agreed on the Monetary Policy Framework Agreement that we have signed with the Minister of Finance, Central Bank submitted a report to the Honorable Minister of Finance to be submitted to the Parliament. The report includes the reasoning for deviation from inflation of the target, the remedial actions taken, and estimate of the time period within which the inflation target could be achieved. This all on the basis of the new Central Bank Act, our accountability and transparency, that we are taking these steps to explain the deviation. This report will also be made available to the public on a transparent basis, making a significant milestone in further enhancing Central Bank's accountability to the Parliament and also to the general public. Continuing the recovery observed since second half of 2023 in terms of economic growth, economy rebounded strongly in 2024, initially benefiting from the base effect. We know previous year there was a large contraction, but also supported by accommodative monetary policy stance, that we are back to normal monetary policy stance, and a low inflation environment that all supported the recovery of the economy. During the first 3 quarters of 2024, economy is estimated to have grown notably by 5.2%, which is much higher than what we originally expected, with major key economic sectors recording expansions. Building on the momentum in the economic activity, leading economic indicators of industry and service sectors, the 2 largest sectors, reflect a continuation of the expansion in output of last quarter 2024 as well. So numbers will be out soon. Accordingly, the real GDP growth for 2024 is now projected to have grown by around 5%, registering the highest growth since 2017 that we had close to 5%. The higher than expected growth also provide evidence in deflation in recent months was not due to demand factors, but mainly due to supply side factors, including administrative price adjustments. Supported by the benign inflation environment and gradual restoration of macroeconomic stability, monetary policy of the central bank was increasingly accommodative throughout year 2024. Accordingly, the central bank eased monetary policy on 3 occasions during the year, effecting considerable downward adjustment in market interest rates, thereby enabling a greater transmission of such policy easing to the broad economy. That we are seeing the transition is very effective now. Domestic money market liquidity, which is one of the important factors, remained broadly at surplus levels during 2024, and short-term money market rates, which is a key policy tool that we target, were maintained in line with the monetary policy stance, supported by well-calibrated market operations. The low interest rate environment, coupled with adequate levels of market liquidity, supported the economy to progress through its recovery phase. Accordingly, these enabling conditions encourage consumer spending that we are seeing picking up and promoted investment that led to basis for the economy, but investment still there's some more space to grow in going forward. 2024 had been crucial for monetary policy making as the central bank shifted to one important change in monetary policy, that is moving to a single policy interest rate mechanism from its dual policy rate system that we already announced to the public. As announced in our annual policy statement in 2024, which we announced even earlier, central bank introduced this OPR, or net policy rate, as a primary tool of monetary policy. In November 2024, which signals the monetary policy stance of the central bank, this is a key policy signaling rate based the policy rate, single policy rate. Supported by the eased monetary conditions, credit extended to the private sector, expanded notably in 2024, while credit obtained by the public sector contracted, freeing up financial resources for the private sector investment. That is part of fiscal consolidation. Now see the crowding in for private investments. Central bank facilitated the increased demand for currency by providing adequate currency notes and coins. That's one of the responsibilities. This ensured that transaction could be carried out unhindered amidst the recovery of domestic activity. During 2024, public adoption of digital payments also continued increase, but we have some more long way to go for the adoption of digital payments, especially payment and settlement. Further, customers' payments to government institutions, that's the first part, through online payment platforms have also recorded a notable expansion in 2024 that will continue going forward. On the external sector, it's continued its positive momentum in 2024, building renowned resilience in the sector. The balance of payment position strengthened, and the current account is estimated to have recorded surplus in 2024 as well, a record of 2 consecutive years of surplus in the recent history. So, central bank purchased the highest ever annual amount of foreign exchange from the domestic financial market in 2024, exceeding $2.8 billion on a net basis. Gross official reserves increased to around $6.1 billion by end 2024. Of course, we had $6.5 billion by end of November. There's a large repayment of initial settlements due to debt restructuring completion. We had some one-off payments. As a result, it's now at $6.1 billion. By end of 2024, we are confident that we can build up more. This is compared to $4.4 billion we had end of 2023. We are all settled. Government has already settled all the past due obligations and go back into the normal repayment schedules after restructuring. The Sri Lanka rupee also, despite all these large purchases, recorded an appreciation and demonstrated greater stability during 2024 as well, after the sharp depreciation we had in 2022, driven mainly by net forex inflows and improved market sentiments that we have seen so far. On the financial system, which is also our responsibility to maintain stability, remained resilient and showed greater stability in 2024 compared to the challenges we had in 2022 and 2023. With the gradual dissipation of spillover effects of the economic crisis on the financial sector, the soundness of the banking sector improved during the year. Gross loans and receivables of the banking sector continued to grow, while the default risk of the sector declined during the year, as reflected by the reduction in the NPL ratio compared to the peak we had last year. Further, the liquidity coverage ratios of the sector, liquidity also now well liquidated banking sector, remain well above the minimum regulatory requirements in liquidity. So during last year, the banking sector return on equity also improved. Capital adequacy ratio of the banking sector improved, also reflecting higher growth recorded in the regulated capital than risk-weighted assets. Meanwhile, the finance companies, this other sector coming under our supervision, that sector also recorded a steep recovery in total loans and advances, while profitability indicators also improved in 2024. Financial markets operated with low stress as macroeconomic conditions and the confidence of market participants continue to improve. So, central bank, one of the responsibilities, continue to strengthen the regulatory framework of the finance sector coming under our purview, with a view to ensuring the safety and soundness of financial institutions. The legal and regulatory framework of licensed banks was strengthened, as you know, through the Banking Amendment Act, amending the earlier Banking Act, and issuing of necessary directions to licensed banks to facilitate the effective implementation of the amendments. Accordingly, Banking Act directions on inter alia, large exposure, corporate governance, liquidity ratios, related party transactions, and offshore banking business were issued under the new Banking Act, banking amendment to the new Bank Act, existing Act. Further, central bank developed the bank recapitalization strategy. That's one of the concerns we had earlier. In line with the roadmap for the restructuring and recapitalization of 9 large domestic banks, with the view to strengthening the system stability through an adequately capitalized banking system which can support the financial intermediary function to support the growth. So, depositor-wise data collection system, that's important data collection of the depositors of the banking and other system, was also initiated to cover all licensed banks and licensed finance companies to enhance effectiveness and efficiency of the compensation payment mechanism in an event of compensation payment under the Sri Lanka Deposit Insurance Scheme. So, we are in the process of making 100% data collection of deposits, ensuring accurate, timely, and streamlined management of depositor information. I think this is an important requirement. Central Bank achieved significant milestones in 2024 in strengthening the resolution framework under the Banking Social Provision Act. This is another reform that we introduced in 2024 by bringing in the Banking Social Provision Act. This important act which gives us confidence in how to resolve in case of resolution. This achievement span key sectors, key areas such as resolution policy formulation. We have very clear policy framework for resolution. Issuing a direction to the licensed bank on data templates for resolution planning, resolution trigger establishment for licensed banks, and operationalization of financial stability fund. So that's also important element of the safety or buffer in terms of stability. In October 2024, this fund was established with an initial allocation came from the Minister of Finance of 500 million. So we expect that to be enhanced for the strengthen going forward. Meanwhile, regulations on financial consumer protection, this important area, the new area that we are now having some work, were fully operationalized effective from 2024 August, making a significant milestone in the central bank's efforts to enhance financial consumer protection. This is something very common these days, complaints against the financial services. So we want to strengthen the other side also on the consumer side. During 2024, the responsibilities to handle prohibited financial schemes, related case, this is another issue that we are facing for some time. This action was transferred to a much more focused, dedicated department. Now it is under the Financial Consumer Protection Regulations, under our department called Financial Consumer Relations Department. During the year, restrictions on investment, that's again foreign exchange operations. We are functioning, agents function on behalf of the Minister of Finance. This restriction on investment made outside Sri Lanka by resident Sri Lankans and capital transfers by immigrants was significantly relaxed during the last year. These restrictions were in place since 2020, so for some time it has been there because of the balance of payment issues we faced in the past. Similarly, the rules relating to repatriation of excess proceeds to Sri Lanka and their conversion into Sri Lanka rupees were also relaxed during last year from the request coming from the export sector. So that has also been completed last year. Central Bank continued to enhance on the payment side, national payment infrastructure, further by way of integrating into regional and country payment networks. That's one other development happened last year on the payment and settlement. With a view to ensuring Sri Lanka's payment infrastructure is compliant with international standards, ISO 20022 implementation project completed its first phase in 2024 by introducing a new RTGS system, real-time gross settlement system. In addition, the central bank played an active role in developing the government digital payment platform I already mentioned, which is an initiative aimed at improving citizen-government interactions and making government payments online and digital, and streamlining the payment process for various government services in Sri Lanka. So there are a lot of institutions now joining in the e-government payment system. Aimed at restoring fiscal sustainability, that's the other important counterpart of fiscal monetary policy. Fiscal set of performance was continued to improve in 2024, supported by consolidation measures in line with the IMF program. These policy reforms have been reflected in government finances in 2024, with a notable increase in tax revenue collections and broad-based improvements in key fiscal indicators, including achieving a sizable private surplus. I think you saw yesterday, mid-year report was submitted to the Parliament, and there was a discussion on the fiscal policy. In addition, the important continuation of structural reforms, including the important one, cost-reflective pricing mechanism for major utilities, the significant policy reform, have largely supported reducing the burden of state-owned enterprises on the fiscal balances and also on the banking sector and also to the taxpayer. See, improved fiscal performance, along with the reduced risk premia in an environment of declining market interest rates, help notably reduce yields on government securities. That's significant saving for the government in terms of interest expenditure, thereby reducing interest costs. Further, fiscal consolidation measures complemented the central bank efforts to ease monetary policy, which highlights the importance of fiscal prudence for monetary policy making. So those are briefly what happened last year. So I would like to focus more on more important area on the policy structure plan for 2025 and beyond. And first, we'll talk about price stability, the monetary policy. As I stated earlier, normalcy now is being restored and stability is attended through the implementation of much needed sound macroeconomic policies, including the monetary policy. Central bank focus going forward obviously will continue to be on maintaining stable inflation around the target of 5% that we agreed with the Minister of Finance, while ensuring that the economy remains on track towards achieving sustained growth over the medium term, thereby ensuring prosperity for the nation. This low and stable inflation is a necessary condition, essential condition for the country to grow on a sustained basis. The deflationary environment resulting from one-off effect of supply-side price adjustment that will continue in early 2025 as per the current predictions. However, inflation is projected to converge to the target level of 5% during the latter half of the year, with the dissipation of these supply-side effects and accommodative conditions created by relaxed monetary policy. Until then, central bank will continue to submit, if there's a breach in our target, even on the low side, will continue to submit comprehensive reports to the Parliament and also public as required under the Central Bank Act, providing reasoning for missing the inflation target, despite it being on downside, with the aim of ensuring transparency and accountability of actions of the central bank. In fact, following the very high inflation episode we had from late 2021 to early 2023, we first firmly believe that this temporary period of deflation would provide some respite to the general public by damping or managing the cost of living that already went up to a certain extent. The broad-based recovery of credit to the private sector observed in 2024 is expected to continue in this year as well, supported by the prevailing multiple stance and improving the business and investor sentiment as a result of policy reforms, thereby supporting domestic economic expansion. That said, Central Bank will continue to closely monitor developments in credit and related dynamics to ensure timely identification and mitigation of potential risks and vulnerabilities in maintaining domestic price stability. We have no issue with if that is needed. We will take appropriate, timely monetary intervention that will prevent excessive swings in interest rates, setting the platform for the economy to navigate through challenging economic circumstances while facilitating the economy to reach its potential growth. Not beyond that, so increasing potential need another structural reforms. The recovery in credit to the private sector has been supported by the northward reduction in market interest rates. However, the central bank observes some excessive outlier rates of interest on facilities extended to MSMEs, as well as marginal borrowers and certain credit products which are not consistent with the prevailing relaxed monetary policy stance. Moreover, risks associated with lending are on the decline, while the credit appetite of the banks and financial institutions is improving given the overall stability and the recovery that we have seen. Therefore, with the view to making low interest rates credit accessible, Central Bank will closely work with banks and the financial institutions to reduce any excessive margins on interest rates that are still prevailing in certain market rates. While low interest rates have helped revive credit and contributed to improving overall business sentiment, they could also disproportionately hurt savers. However, unlike during the high inflation episodes, real returns on deposits have been positive, very largely positive, with inflation successfully being reined into low levels. Interest rates have their cycles, and Central Bank will maneuver interest rates to ensure that inflation is kept low and stable with a view to promoting overall public welfare. It's an important objective. Amidst this development, to ensure that domestic savings are promoted in a low interest rate environment, the financial industry is encouraged to introduce innovative solutions and products to promote savings in the context of rapidly aging population, while also embedding elements of liquidity and safety to compensate for interest rate volatility during business cycles. They are partly the responsibility of the legislation, but anyway, we encourage to have these products in the market to promote savings of the country. Moreover, the culture of savings at an early stage of life should be nurtured, which will not only promote long-term savings, but will also ensure greater financial security for a better life after retirement. Central Bank follows a forward-looking, data-driven approach to monetary policy formulation. This is an integral feature of policymaking under the flexible inflation targeting framework that we all have a good understanding now. Continuous efforts will be made to improve existing models used to generate macroeconomic predictions, while the evaluation of alternative models and frameworks to complement the same will continue in parallel. So we are increasing our capacities and capabilities to have a better prediction forecast in monetary policy making. Additionally, enhancing policy research and nurturing a strong research culture within the institution will remain as a key priority for the Central Bank. These efforts on improving technical capacity are expected to better support the monetary policy decision-making process via high-quality analysis and better data collection and forecasting capabilities aided by modern technologies. Moreover, the Central Bank will broaden its spectrum of data used for policy analysis by exploring new sources of high-frequency data to enhance short-term forecasting, while the coverage of service conducted by the Central Bank will be further improved. That's very important for scientific evidence-based policy making. We will continue to strengthen that area for us to be able to implement policies in much more effectively with evidence-based. Moving on the implementation of monetary policy, the monetary policy operations will be carried out as second part of policies, making policy and the operations to ensure that monetary policy transmission happens properly. Operations will be carried out with the aim of steering the short-term market interest rates in line with central bank monetary policy stance as announced through overnight policy rate. That's an important transition mechanism. As already witnessed, with the introduction of the overnight policy rate under the single policy rate mechanism and simultaneous monetary policy easing, the short-term market interest rates, particularly the CMR, average weighted call money rate, which is the immediate short-term target, remain well aligned with our benchmark rate of OPR. Several further measures have been planned for this year, 2025, to enhance the effectiveness of monetary policy transmission and implementation in market operations. Central Bank will continue to manage liquidity in the domestic money market to steer the short-term target interest rates in line with our monetary policy stance. Domestic money market liquidity is likely to increase gradually in 2025 with the expected build-up of foreign reserves. Central Bank will stand ready to manage any excess liquidity through appropriate monetary policy operations. Meanwhile, the Central Bank will explore ways to gradually phase out our holdings of restructured bonds. We are large around 2.6 billion, 6 trillion, a legacy of the Central Bank finance support to the government during the crisis. So we have to unwind gradually over a period of time. Central Bank is in the process of reviewing the current statutory reserve requirement, that's called SRR framework, in line with the international best practices. Required changes will be implemented following stakeholder consultation. Obviously, we consult the stakeholders, banks and other market players, to optimize the SRR framework for the benefit of effective monetary policy implementation and the overall financial system. Further, the Central Bank plans to transition to a more market-friendly system for open market operations in this year, with a view to effectively manage implementing the monetary policy under the single policy interest rate mechanism and to adopt evolving domestic and global developments and best practices in implementation of monetary policy. Accordingly, an OMO auction schedule, open market operations schedule, is expected to be announced this year to create certainty on liquidity management among market participants and it's much more transparency and predictability in OMO auctions going forward. In addition, the Central Bank will enhance the liquidity forecasting framework. That's an important agenda for us to be ability to properly forecast liquidity in the interbank market and explore alternative approaches to manage money market liquidity in line with the flexible interest rate framework that will continue to improve this process. Further, during 2025, we expect to review and streamline the eligible counterparties of monetary policy operations. So we have a certain set of counterparties. We'll review and streamline the eligible counterparties for the purpose of improving the effectiveness of open market operations and standing facilities, both lending and deposit facilities. Speaking of the stability of the external sector, the near completion of the government's external debt restructuring, coupled with significant progress made on the IMF program, has created a solid foundation for boosting investor confidence and ensuring the stability of the external sector. In this regard, Central Bank will closely observe the developments and risks on the external front to advocate appropriate policies promptly. Sri Lanka has been able to record, as I said earlier, current account surplus in the last 2 years, and as economic activity picks up, the external current account is likely to record a deficit in this year. That's necessary for when economy is picking up. Sri Lanka needs to maintain external current account at a sustainable level. So I think maintaining current account deficit of 1 to 2 years is not a challenge. We can easily manage, but that's why we need to manage that current account deficit going forward. A gradual recovery in import expenditure. Also, when economy is recovering, import expenditure also expected to grow. Particularly in the context of some of the relaxation, already introduced certain relaxation of vehicle imports, and also with the economic growing credit moving into the economy, there will be more demand for imports. That we will expect that current account and also those flows, deficit will be supported by inflows of other areas from the services, worker remittances, and also which are now at the historically high levels. Journey towards ensuring the long-term stability in the external sector is an important objective. Will be essentially built upon under the IMF program to ensure implementation of necessary reforms to maintain overall macro stability, especially on the external sector. Obviously, our responsibility is we will continue to strive towards key commitment of rebuilding external buffers under the program by purchasing forex from the market and building more resilient and buffers for us to meet in any of the stresses and shocks going forward. This build-up of external buffers needs to be facilitated by sufficient foreign exchange inflows to the country by way of enhanced earnings of foreign exchange, both all from merchandise, service exports, or remittances, foreign direct investments. Those are the important areas that government need to focus on promoting for us to be able to build buffers for the central bank. So this can have a lot of policies that need to be introduced. Also, there will be due attention will be given to strengthening risk mitigating aspects to ensure the safety of invested foreign reserves. That's our responsibility to generate safety and return of the increasing reserves that we manage. Aligning with our mandate, Central Bank is committed to maintain a market-determined and flexible exchange rate, serve as a buffer against external shocks, if there's any, with interventions aimed at building up reserves and mitigating excess volatility in the exchange market. Obviously, we have the right and we will intervene if there's excess volatility because we have created buffers for us to meet that objective. Central Bank strives to foster deeper, transparent and more liquid financial market. That's another part we would like to develop. Financial market should be able to stand in stocks and have smoothen out volatility through proper, deep, liquid financial market. For this purpose, we hope to introduce what they call benchmark spot exchange rate as a reflective rate to guide participants in the domestic foreign market and with much more transparently information available to all the players as well as to the general public. So that we are in the process of introducing what they call benchmark spot exchange rate to improve the current system. And also in this area on the balance of payment data, Central Bank successfully operationalized support from those banks, the International Transaction Reporting System, what we call ITRS, in 2023, has started publishing monthly statistics in trading services. Trading goods obviously we get from customers, but trading services, ITRS, help us greatly to have proper statistics. This should enhance accuracy and coverage of external sector statistics, thereby facilitating policy formulation to harness the potential of our country. Central Bank plans to use this ITRS, the new system, to improve the data quality and coverage of the financial account of the balance of payment, facilitating policy analysis and planning related to foreign exchange outflow. These are very useful information in some of the areas that we don't have sufficient information, especially foreign exchange transactions. This is a very important system that we have introduced. We hope that banks will support this, continuous support. In concluding this section on our policies on the monetary policy and in keeping with the such requirement and our past practice, I would like to unveil what we call monetary policy advances calendar that will be announced and published soon from today's statement. You can see it there. It's a 6 monetary policy reviews and specific dates announced in advance so that markets know that what are the important dates in monetary policy reviews and announcements. So now let me move into the other important area of our responsibility, which is financial system stability, and we'll start with the banking sector. With a view to securing financial system stability and strengthening the operational resilience of the banking sector, Central Bank expects to implement an array of policy measures spanning from the near term to medium term. In line with the roadmap for restructuring and recapitalization of 9 large domestic banks that we all know bankers, we started this process from 2022. Central Bank now has developed bank recapitalization strategy to strengthen the financial stability through an adequately capitalized banking system. Under this strategy, these banks have submitted already board-approved recapitalization plans, and the progress of the implementation of these plans would be monitored semi-annually with the ongoing oversight to ensure compliance with minimum capital requirements for all banks. Further, to ensure that financial system comprises strong and resilient banks with adequate capital, a framework for market-driven consolidation of licensed banks is to be established, and consolidation is expected to be facilitated on case-by-case basis. That's another important medium-long-term agenda to support market-driven consolidation of licensed banks. The implementation of the directions issued by the Banking Amendment Act, covering areas already mentioned, such as large exposure, corporate governance, liquidity ratios, real part transaction, and offshore bank system, will be continuously monitored in 2025 and going forward. Existing regulations will be reviewed in line with market developments and international best practice. Obviously, these are our dynamic measures and policies. That's to ensure regulatory framework is further strengthened, advanced, and follow all the best practices. The central bank, with the coordination of the Colombo Port City Commission, will facilitate the conduct of offshore banking businesses through required regulatory and supervisory function that we are working with the banks and the Port City Commission this year as well. Further, resilience of the financial system would also be strengthened through enhanced crisis management and resolution measures that we started this process during the stress times. We continue to have this monitoring the crisis management and resolution. Central Bank would continue to coordinate and assist the functioning of the Financial Crisis Management Committee that has now established on a permanent basis. The effectiveness of risk-based supervision would be enhanced by improving the supervisory infrastructure and continuous surveillance of banks that will be intensified this year. Other important area is obviously the AML CFT examinations. I'll discuss in detail. It's an important area that we have an important task this year. There are certain measures that we will introduce this year, focusing on the mutual assessment. In relation to non-bank financial institutions, Central Bank remains committed to safeguarding the non-bank financial institution sector by strengthening the regulatory environment. So we follow the same kind of practices into the non-bank sector. Alongside, the key instrument there is the implementation of the master plan for consolidation of finance companies, which was initially announced in 2020. The master plan aims to create a strong and stable non-bank financial institution sector and consists of two phases. Under phase 1, 8 amalgamation transactions were successfully completed. The revised phase 2 of the master plan was announced in December 2024 with an execution period spanning over 3 years from March 2025 to March 2028. Now this is about phase 2. This phase 2 focuses on enhancing the resilience of finance companies that intend to continue on standalone basis. The progress of these finance companies in meeting the benchmarks established under phase 2 would be monitored to ensure successful implementation of the revised phase 2. To strengthen regulatory oversight, enhance risk management, and promote stability of the non-bank financial institutions, the sector, amendments also would be made to the Finance Business Act and the Finance Leasing Act. So we'll do it in this year in line with the developments in the non-bank financial institution sector. Obviously, we will have a consultation with the sector when we introduce these legislations. To broaden the regulatory framework and thereby improve the risk management and stability of the sector, rules and regulations are to be issued. In addition, automation would be embraced to improve the effectiveness of the supervisory process. We are also improving our supervisory process, bringing in as much as technology to improve effectiveness, while enhancing public disclosures to raise awareness of financial performance of companies. They will have much more public disclosure of the performance of the finance companies on a transparent basis. Now we turn into macroprudential policies. That's the central bank now under new act is the Macroprudential Authority of Sri Lanka. We published the macroprudential policy framework as a step towards ensuring some stability through enhanced communication on macroprudential approach. That already published this thing. Central Bank is strengthening our macroprudential approach through enhanced systemic risk surveillance. This overall risk pursuit on the systemic basis. In this regard, stress testing and analysis framework were further improved to better estimate and understand the sensitivity to various macro-financial stress scenarios, thus strengthening the monitoring of developments and risks in the financial system overall. The central bank envisaged extending its stress testing framework to the financial sector, finance companies as well in this year. So that's really further broadened to other financial sector players as well. Furthermore, the reassessment of the DSIPs with the required capital buffers have also been now completed. Announcement of the DSIPs along with corresponding DSIP capital buffers is expected now, we'll announce this year. Moving forward, the central bank will focus on identifying systemically important finance companies to strengthen the financial sector resilience. Is parallel to DSIPs of banks. We also have similar system for finance companies as well. A targeted policy approach through the use of appropriate macroprudential tools will strengthen oversight of banking sector credit. It will improve risk management among lending institutions and ensure financial system stability. As a macroprudential authority of the country, the central bank extends its macroprudential approach to financial sector participants outside the bank's regulatory purview through the Financial System Oversight Committee, or what they call EPSOC. That's the overall coordination with the other financial sector regulators, which obviously bring all regulators under one umbrella from the macroprudential surveillance point of view. We have taken a wide range of policy measures to ensure stability, and further policies are underway covering multiple aspects of this financial system stability. It's important other risks that we see as economy recovers, the credit cycle moves into expansionary phase. So we are already in the expansionary phase. Vulnerabilities may arise due to increased risk taking and heightened exuberance. As such, central bank will diligently monitor systemic risks and promptly implement appropriate macroprudential and microprudential policy measures to address any potential emerging risks to ensure continuous maintaining system stability. On the other important area on sustainable finance, we have important initiatives under sustainable finance. The one is the Sustainable Finance Roadmap for Sri Lanka, the version 2. Now we are working on that. This is to be launched in this year in line with evolving global and domestic conditions, and to be operationalized with a view to providing timely guide for the expansion of sustainable finance activities in the country. We have some initiatives and we will continue to work on that, on areas that we are responsible. To support this implementation roadmap, Central Bank would continue. One area is capacity building. In this area is we need more capacity building activities, including programs on Sri Lanka Green Finance Taxonomy that we are going to introduce or update, to equip stakeholders with necessary knowledge and tools to integrate sustainable practices in line with the roadmap that we announced. The existing regulatory framework for sustainable finance activities would also be reviewed based on the updated Basel core principles with necessary actions to address any, and in fact this has now become into a standard in Basel core principles to monitor and address any risk coming from the climate events and other, and also support sustainable financing. Moving into the other payment and settlement systems, that's also our responsibility. We know that maintaining a stable and efficient payment system is pivotal in ensuring sound financial system. That's part of the stability payment system is we are the regulator. In this regard, initiatives are planned to improve relevant legislations and payment infrastructure and increase public trust in digital payments. So that's one area that we are seeing We have to work more on the public trust in digital payments while promoting technology and technology. We need to improve public trust in these areas as well. As digital payments grow faster, Central Bank has initiated multi-pronged 3-year comprehensive plan to enhance the legal and institutional structure of the payments landscape. This approach begins with enhancing first the legal framework that governs the oversight, supervision and regulation of payment and settlement systems, as well as facilitating payment innovations and development of digital payments market in Sri Lanka. So these are several objectives under this agenda. Accordingly, the Central Bank is in the process of revising the Payment and Settlement Systems Act that now governs this activity. Will be revised. Several subsidiary legislation such as guidelines on the minimum compliance standard for payment related mobile applications will be revised in 2025 to facilitate the rapid expansion of retail digital payments. We need to support payment, also make sure compliance. In the same area, we have launched a new RTGS system last year, as already mentioned, that's fully compliant with all the international standards. We plan to extend this standard to all cross-border transactions as well, aligning with international timelines. So this is not only local. We want to expand across the standards across cross-border as well. The common electronic fund transfer switch would be further extended to reach more points of access, especially targeting government payments. In 2025, government digital payment platform which enables government institutions with digitalized database to receive real-time payments from the public through internet banking portals, mobile payment apps will be operationalized following successful pilot testing already done. In 2025, this will be fully implemented. Further, Central Bank aims to review the access regime to interbank payment system, as well as licensing regime for payment services. So the latest one we all know, merchandise discount rate for Lanka QR was restored to 1% now, up to 0.5%. That new 1% rate will be applicable from 1st of January 2025. This is to encourage financial institutions and fintechs to promote the adoption much more actively and efficiently. There's incentive for that purpose. Moreover, recognizing the vulnerabilities associated with digital payments, Central Bank is committed to safeguarding public trust, as I mentioned earlier, by monitoring fraud patterns and issuing necessary guidance to prevent those frauds. As part of this, Central Bank issued a circular to safeguard the current and savings account of customers from unauthorized access through payment apps in 2024, with still effect from March 2025. This should add the existing regulations related to payment app security. So there's important security aspects that we need to ensure these payment apps have a public trust and the safeguard. To bridge the gap in digital payment adoption, the Central Bank will conduct nationwide public awareness programs. So this adoption is so important. We also play a role there. Through this public awareness programs on digital payment services, there are benefits associated with security features and possible threats such as frauds and scams through mass media. So we have a communication strategy to address all this as well. Let me also briefly tell you now plan efforts to, as I said, other side of the business, that is consumer side, financial consumer relations. Strengthening financial consumer protection is one of the key priorities of Central Bank, aims to foster more transparent and consumer-centric sustainable financial system. A series of strategic initiatives are planned for 2025 and beyond in this regard in order to enhance the trust of financial systems among the general public on this system. So the scope of market conduct supervision is expected to be broadened by increasing the frequency and depth of on-site examination that we started last year, on-site examination of market conduct. This aims to ensure greater compliance with financial consumer protection regulations and to address emerging financial consumer risks. In order to address critical financial consumer risks and dissatisfaction and to set clear guidelines to prevent unfair practices and compliance, directors focusing on issues such as fees and charges, penalties, and the imposition of interest on future obligations are to be issued. This is the more disclosures, more transparency in all these fees, charges, and on the consumers. In an attempt to enhance transparency, it is planned to display key financial information that matters for public, such as interest rates, fees, and charges of all financial service providers on the central bank official website, enabling consumers to make informed decisions. So we will have this system so that financial consumer will have much more transparent information and more disclosures. So that's all about our second key objective, financial system stability. Then we have another few key objectives. First one is we have some responsibility on promoting financial inclusion under the new Act. It also carries out we have several other agency functions. So on the financial inclusion, with the enactment of this new Act, as I said, the primary focus of the regional development role that we had earlier in the central bank has evolved to promote financial inclusion now. This shift signifies a broader recognition of the importance of establishing a more inclusive and sustainable financial system, while some of the functions of credit delivery have under the Ministry of Finance and the different department after the new Act. So some of the work that we are doing in this area, one is post-implementation analysis of National Financial Inclusion Strategy. That's we are working with a lot of other stakeholders, or what we call NFIS Phase 1, that will be conducted in early 2025 to assess the overall impact of the financial inclusion strategies and regulations implemented under NFI Phase 1 from 2021 to 2024 with all the other stakeholders, not only the central bank, we are working with other stakeholders, which will be followed by a national level demand side survey to understand the demand side of this aspect. Phase 2 of the NFIS is expected to be developed in 2025, that our staff and other agencies are working on this. New phase will consider specific interventions for expanding the usage and quality of formal financial services to disproportionately excluded population segments of the country. This is an important one, to have financial services access to the whole segments of the community up to the grassroots level from the corporate. So that's why this agenda we also play a role in this overall agenda with other stakeholders. Further, the central bank expects to expand the scope of existing financial inclusion policy framework by integrating inclusive green finance. That's also part of the sustainable finance. We also have one branch, inclusive green finance, also will come into this financial inclusion strategy under the NFIS, by widening the financial consumer protection also pillar, that also bring into this pillar, so that as we coordinate efforts, one is inclusion, other one is consumer protection and digitalization. All this will be under and financial inclusion, that's all, and literacy. The whole will be much more focused agenda for next year. And other area that is moving away from our central bank is public debt management. You all know that's a new agency already established. From the inception of central bank, public debt management has been one of the key agency functions carried out by the central bank. After nearly 75 years of the central bank handling this responsibility, the Public Debt Management Act was enacted in 2024 to create a separate office dedicated to managing all aspects of public debt under the Ministry of Finance. This will help eliminate the long-standing issue of what you call conflict of interest of conducting monetary policy and managing public debt by the same institution, so that we will no longer have that at least technical conflict of interest, but we have been managed well in the past. Central Bank would facilitate in transferring the public management function to the dedicated institution called what we call PDMO, Public Management Office, and the Ministry of Finance, which is expected to be operationalized by the end of this year. So as a transition period, this function will fully move into the new office, the MOF. Central bank, so obviously we will support the transition and we support all the system that we have developed and continuation of these good practices. On the foreign exchange management, that's again another agency function that we are carrying out on behalf of the government. Following the rebounding activity in the domestic foreign exchange market, a thorough and detailed review will be initiated to reassess the existing foreign exchange regulations, orders and directions issued under the Foreign Exchange Act. This review aims to evaluate the evolving dynamics within the domestic foreign exchange market, address the changing needs and concerns of stakeholders, and enhance the overall regulatory framework. Under this, there's one other thing what we call export process monitoring system, which we introduced recently in 2022. This will be further developed to ensure greater efficiency, transparency and effectiveness in monitoring and initiating actions against non-compliance under export process monitoring system. These enhancements, I'm sure all stakeholders are supporting this. Enhancement aim to foster greater transparency and contribute to the overall stability of the country's foreign exchange resource, and information would be useful for us to make informed policy decisions as well, also for the government. Further, appropriate policy measures are expected to be implemented with respect to other important area is conduct of the money changing business to transform the sector into a more credible player in the financial services. Money changing is an important function, providing important service, especially when it comes to remittances. But we need to transform this sector into a much more formal business, and which bring in more credibility into money changing business. And then other important agenda coming under the Central Bank, coming from different act, is the FIU, the Financial Intelligence Unit, that's under Central Bank, within the Central Bank. The Sri Lanka's third mutual evaluation on Sri Lanka's AML safety framework, coordinated by the Asia Pacific Group on Money Laundering, APG, is now rescheduled to commence in March 2026. Earlier this was scheduled in this year, but we got this postponed by 1 year because of the election cycle we had last year. This evaluation is a very important evaluation. It will assess the country's efforts to combat money laundering and the financing of terrorism. Sri Lanka must ensure compliance with the 40 recommendations of the FATF and demonstrate the effectiveness of our AML safety framework under the 11 immediate actions. It's not only the frameworks, but also the effectiveness of immediate outcomes. That's necessary for us to remain. We all can remember we were downgraded to grey list twice in the past, so we don't want to go back to that situation in the future. The high-level AML safety task force now is priority for the government as well. Reconstituted last month, that will remain operational until the successful completion of mutual evaluation. Completion will be in July 27, start in 26 March and completion in July. The Cabinet approved 24 institution-specific action plans. There are already such action plans, which are prepared based on FATF criteria and gaps identified during the previous mutual evaluation conducted in 24-15 and also 21-22, and the national risk assessment, which was conducted recently. So it will cover and identify all the gaps, and then it's our whole responsibility with all the stakeholders to implement and address all the weaknesses in the system, and also make this more effective. Now these are currently being implemented by relevant stakeholders. It's not only central bank, it's a lot of other stakeholders are involved in this process, and implementation progress is continuously reviewed by this high-level new task force, which is, there are members cabinet as well. So FIU, our unit here, with its stakeholders and working groups, expects to conduct another update on national risk assessment by second half of 2025. I did it in the past, but we need to update this national risk assessment based on the looking at the future mutual evolution. This assessment will consist of an assessment of tax crimes, proliferation, financial risk as new areas. These are two new areas, in addition to the updating already done risk assessment. In order to further strengthen the cooperation between FIU and non-financial institutions, we have good cooperation with financial institutions, but we have strengthened the cooperation with non-financial institutions and their regulatory authorities. The FIU expressed to form several working groups in those institutions. Accordingly, it is planned to form separate working groups including FIU, regulatory bodies, private sector institutions, designated non-finance businesses, and professional sectors, and other stakeholders such as the sectors. There's a much broad agenda, so we are coordinating with all the agencies. Additionally, FIU is in the final stages of drafting amendments to the 3 key pieces of AML safety legislation. We need to strengthen existing legislation as well and the legal framework in alignment with latest best international standards. The formalization of the AML Safety National Coordinating Committee will occur under this new legislation through the amendments to the FTRA. These legislative amendments are expected to be enacted by the second quarter of this year, with the review, drafting and issuance of related rules and regulations planned for completion by the second quarter of 2025. There are a lot of work to be done under this agenda. Furthermore, FIU will assist in the implementation of amendments to the Companies Act. This is also part of this agenda. Need to amend the Companies Act, especially on beneficial ownership requirements, and also FIU will assist with any other relevant legislative amendments or regulations related to AML CFT. The one is already, I think, approved by the Cabinet, this Procedures of Crime Act. In order to enhance intelligence sharing and strengthen international cooperation and compliance with global standards, FIU aims to increase the number of bilateral MOUs. So we are signing bilateral MOUs with international players, both locally and also foreign counterparts, to share information. So if I will continue to raise awareness among stakeholders, it's also important to have public awareness on these concerns, AML safety related gaps, regarding this all critical importance of effective AML safety implementation. Strengthening AML safety related frameworks would provide the country with numerous economic, social and national security benefits, including enhanced financial system integrity, increased foreign investments, increased access to international financial markets, and enhanced support for the promotion of good governance practices. We know all the adverse impacts of this downgrading, so we need to make sure we are moving in the right direction. So then let me move into other important agency functions that we are carrying out on behalf of people. This is Employees Provident Fund. EPF, managed by us, the central bank, is the country's largest superannuation fund, with its value surpassing now rupees 4 trillion. It's already surpassed 4 trillion in 2024. EPF is implementing several solutions, including digitalization of records and online payments for member contributions to enhance operational efficiency. That has been improving over period of time. Now we want to complete this agenda of bringing technology and online payments. Undoubtedly, the introduction of online payment avenues will provide convenience and flexibility to the employers in the making of their EPF contribution payments, and this shift will further streamline processes and reduce administrative burdens even for the businesses. While strengthening the contribution collection procedures with modern solutions, several actions are planned to be executed to enhance the efficiency in providing the pre- and post-retirement benefits to them. That's also part of the agenda coming under the EPF, that's under central bank. In addition, ICT infrastructure in the EPF is expected to modernize to re-engineer the existing systems and procedures and internal efficiencies. We need to bring in new investments. Comprehensive ICT solution will facilitate the automation processes, leading to more effective management of the fund as well. Now, other area going forward, EPF is also exploring opportunities to diversify its investment portfolio to achieve a higher risk-adjusted rate of return while ensuring safety, while ensuring safety and long-term sustainability of the fund. By adopting these measures, the EPF aims to maintain its commitment to providing secure and stable retirement benefits for its members. It's an important public function. Then also, on the overall, all the activities, we need to communicate properly and have better public understanding. For that, we have a new important communication strategy for the central bank from this year. Central bank understands the importance of transparency and accountability in its activities, as they are essential for enhancing its credibility. Central bank aims to ensure that its policy messages reach the grassroots level and are correctly interpreted by the public at large. Central bank communication strategy for 2025 will also prioritize accessibility and inclusivity to foster public understanding and trust. Several steps will be taken to improve the dissemination of statistical data to enhance their accessibility and usability. Central bank will continue to have a closer dialogue with stakeholders, all stakeholders in communication, especially the media, to gauge the pulse of public and also gather insights that will help us make better informed decisions and improve our communication. Those are all things that I talk about related to external stakeholders of the central bank. Let me briefly share with you some of the internal steps that we are taking to strengthen the internal efficiency. That's important for public knowledge. Now, central bank is committed to strengthening and institutionalizing its human capital governance, expertise, capabilities, and disciplines, in regard to manage its talent dynamics to deliver its mandate effectively for the progress of the nation. So, we are in the path of revamping human resource strategy. Many initiatives have been introduced to enhance central bank's technological capacity, also bringing technology capacity aimed at optimizing resource utilization, efficient data management, and better decision making. And also, the important part is while cybersecurity aspects also will be given increased attention in the period ahead, because more technology adoption means there's more risk on cybersecurity, so we have to be mindful about all the areas. And also, we have taken measures to implement a risk appetite framework within the central bank. It's all internal thing. As the next strategic milestone for risk management, that's an important area. And for us, this risk management is an important aspect we have to be mindful about. And also, other part is we are also in the process of incorporating environmental friendly and sustainable practices in our day-to-day function. So, now let me just talk about a little bit very briefly to discuss the critical aspects of fiscal, monetary, and financial stability policy coordination, especially under the new Central Bank Act. Policy coordination is paramountly important. The effective coordination between the central bank and the government on fiscal, monetary, and financial stability policies is extremely important for consistent economic policy formulation and in achieving central bank's objectives and also achieving the objectives of the other side. In pursuing the price stability objective, since inflation is frequently influenced by supply side factors and impacts of fiscal policy measures, the proper policy coordination is essential. This is equally important in pursuing the financial stability objective. Government policies could affect the finance sector, while central bank policy on the finance sector could have a bearing on the government operation. So you need to have a very strong coordination among these key policy areas. For this purpose, Coordination Council under the new Act now has been established. And the Act provides for the coordination of fiscal, monetary, and financial stability policies between the government and the central bank. The Coordination Council meets quarterly, where macroeconomic and financial conditions and the outlook and potential gaps relating to fiscal, monetary, and financial stability conditions are discussed in detail, alongside deliberation on strategies and the way forward to address any challenges. So, Governor and the Secretary chairing this coordination, and we have very fruitful, productive coordination now happening since the enactment or implementation of the Act. At the same time, what is called through the Financial Sector Crisis Management Committee. This was established to address the face any potential crisis situation in the last couple of years. And also other one in the Act is the Financial System Oversight Committee, FSOC. Central Bank coordinates with the government and other stakeholders, including not only the government, with other regulatory bodies like SEC, insurance body, and all the other regulators, focusing on crisis preparedness and reducing the risk of coordination failures to maintain a healthy financial system for the whole country beyond the areas that come under our regulation. In addition, we have in very cordial meetings with the legislature, with the minister, president, and the other ministers, also conducted regularly as and when needed on various matters relating to central banking and related economic and financial issues. And also from our side, key officials of the central bank present before several committees and have been participating in several important initiatives like the debt restructuring, external and domestic. We have been involved with our officers, and also before the several committees of the Parliament as provided in the Central Bank Act, as well as on request from the Parliament. We have been engaging and been especially to describe actions of the Central Bank and the impacts on the subjects related to Central Bank. Going forward, the continuation of such fiscal, monetary and financial system policy coordination will remain equally important as the economy is expected to enter a comparatively normal period after several years of crisis and uncertainty. Healthy policy coordination is expected to lead a stable macroeconomic environment. It's important, healthy policy coordination is expected to lead a stable macroeconomic environment. It is an absolute necessity for the stakeholders, including the private sector, to promote productivity and efficiency in the economy, facilitating sustainable, inclusive growth. Finally, ladies and gentlemen, I would like to conclude. Sri Lanka stands stronger with the restored macroeconomic and financial sector stability following several difficult years. Notwithstanding the Sri Lanka's faster than expected recovery compared to the other countries that face similar situations, sustaining stability in the medium to long term remains conditional on the country's commitment to pursue necessary economic reforms. Achieving a transformative acceleration in growth trajectory is a transformative acceleration. It's not going back to conventional old model. We need to transform the growth trajectory into is essential to catch up and enhance the growth potential. This should also help enhance the debt carrying capacity of the country, including the sovereign. Building buffers to withstand shocks in all monetary policy buffers, external sector buffers, and the fiscal buffers, and all the other policy areas is essential to maintain stability and the next step for the country's progress. In this regard, Central Bank will continue its role in maintaining domestic price stability and safeguarding financial stability to the two important mandates that we have, while supporting the economy to reach its potential. So with that, let me again thank you very much for patiently waiting and listening. And I hope we will be publishing this document, and also it will be available, transferring to all the stakeholders and to the public. Thank you very much.
Thank you very much, sir, for setting the course for the period ahead. Ladies and gentlemen, the policy document outlining the central bank's policy agenda for 2025 and beyond is now available online in all three languages on the central bank's website, www.cbsl.gov.lk, and it will be under the category of speeches. And for quick access, we will show you, we've got a QR code which is displayed on the screen behind me, and that will help you to retrieve the document instantly. With that, ladies and gentlemen, we have now come to the conclusion of today's proceedings. And on behalf of the Central Bank of Sri Lanka, I would like to express our sincere gratitude for your presence here today. We hope that you will continue to join us as we move forward in this era of reform, building on the stability that we've achieved and striving for a future of sustained growth and prosperity. Please do join us for refreshments in the adjoining lobby area. Thank you again, and I wish you all a successful and prosperous year ahead. Thank you very much.